I've recently had a conversation with my dad, and was a conversation about money. Basically, I told him like how much I was saving in the last year and a half, and exactly the amount of money and how I manage it. And basically, he said like he was amazed. He was like, "Oh, this is awesome! I could pay the rest of my mortgage with this amount of money. It's great. I'm proud of you," and stuff like that. And then, like in that moment, I think that he was like, uh, he felt the exigent of give me some kind of that good dad kind of advice. And he goes like, just the one thing you have to remember, because you're really young, so I don't want you to step on this trap, which is like investment. You don't have to investment. Never ever do not invest your money. It's all a scam. Well, like I had at this moment I had like two choices, and it is a true story. Um, like I had two choices. The first one was like lie at him, in order to avoid the Third World War, or choosing the second one and just tell him the truth, And boldly, I chose the second one. I explained to him everything, all the basics about investment, and what I have learned in the past 2 years. And he, with my surprise, he really, like, he really was listening to me really carefully, and he really listened to me with open mind. And he goes like, "Hey, it's amazing. Like, I mean, I love this kind of stuff. I wish to know this at your age." And just for a little bit of context, like I'm currently living abroad, and I'm from Italy, a country with zero culture on money, and even less about investments. To let you understand how boldly I've been. But like this conversation make me think about, hey, I should make a video, where I'm talking about this kind of stuff, because like in a way to ideally like talk with myself 2 years ago in order to help someone else to figure out these things faster and earlier, than me and than my dad in this case. So in today's video, we're gonna talking about all the things that I said to my dad, basically, which are all the basics of investments. So we're gonna talking about what an investment actually is, why you and all the people you are already investing, like, but you don't know yet. Then what is the risk return trade-off? What is like diversification, inflation, and why understanding all this how this world works is really important. Let's mull it over. So, according to Wikipedia, to invest means like allocate money or other resources like time in the expectation of some benefit in the future. So, for example, a college degree is an investment. A new pair of shoes is an investment. A gym membership is an investment. A house is an investment. Starting a family is also an investment. They are all investments in some sort, where you give up some resource today or over time in order to get some benefit in the future. So today I'm not gonna talking about this kind of abstract like investments, but I'm more precisely gonna talking about financial investment. But don't run away, because you're already doing it. Everyone is already doing it. If you are not investing, you are investing in a single bank, in a single currency, and in a single country. So if you are passive with your wealth management, you're not playing safe, you're playing for someone else. And you are leaving opportunity on the table, and you're risking bankruptcy, your country crisis, hyperinflation of your currency, or your specific bank crisis. And if this sounds really impossible, or at least unlikely, for your rich country where you live. Just maybe you forget that just in March 2023, three main bank in the world, which was like Silicon Valley Bank in US, First Republic also in US, and Credit Suisse in Switzerland, in two of the most richest countries in the world, they got a bank run and they collapsed. And this is something that is scared me and my dad a lot, you know. And at this point my dad said like, okay, I understand, like bank is not that safe as I thought, but what about like, so I should like buy physical gold and like keep all my money with me and withdraw everything and that's it? I said of course not, because you're not taking account the inflation. And the inflation is the overall increase of on consumer goods price. So if you leave your money sitting around, they're actually losing purchasing power because the cost of living is rising. So the first step for me is like spending less out of what you're earning and invest the difference in order to get a return. But let's break this concept down for a second. The first investment that everyone should start with, according to like big experts like Mr. Retired in Progress, one of my biggest source of motivation and inspiration in the internet with his blog and YouTube channel, or another amazing blog that I already written in this channel, which is Mr. Money Mustache, should be like frugality. So frugality means cutting expenses that doesn't give you value and spending cautiously what it does. It is a continuous like analysis of your values. In other words, frugality is efficiency and is the only non-ridiculous lifestyle for the thinking person. So now let's assume that you are a frugalist and every month you can afford to invest X, okay? My dad said like, okay, now that once I saved some money, well, where should I invest, you know? And I said, well, there are basically like different kind of instrument that you can invest with, but I will specifically in this video focus on just two, which are the main one, stocks and bonds, in order to get a return. The stocks are generally speaking riskier, but with unexpected higher returns, and bonds are generally speaking less risky but with a less expected return. But let's come back a second. What is actually a return of investment? So a return of investment is money that you earn on top of what you are committed to your investment, and is typically represented as an annual percentage. So let's think for a second that you invest €100 a year. So if this year you got like 10% of annual return, at the end of the year you will get €110. The problem with that is that this 10% of our example is not guaranteed. So it will depend on how of your investment perform like throughout the year. Clearly the investor wants to maximize as much as possible, of course, the money that they got at the end of the year, and minimizing the risk in the meantime. This brings us to the first fundamental relationship faced with investments, which is the risk-return trade-off. Some investments are riskier than others, and generally because higher is the risk, higher it will be the return, usually. So it's up to us to find the right balance between risk and returns. and depending, for example, of your age, your time horizon, or your psychologically tolerance. And according to the brilliant portfolio manager Ben Felix, that he explained magnificently in one of his videos in his channel, there are 5 most important risks that every investor needs to understand at the really beginning, which are like the total loss, the volatility risk, the uncompensated risk, the skewness, and the inflation. I will explain this kind of risk like later in another video. For the moment, I will focus just on the solution to mitigate all these risks together, which are the main one. And the solution is diversification. So diversify your portfolio as much as you can. Ideally, you should invest in all the world in order to diversify as much as you can. Then you should approach a long-term investment horizon and get your emotion out of the equation. And how I wish to know years ago about investment is that you should approach a really long-term horizon. You should diversify your portfolio and get your emotion out of the equation. So ideally, just forget about your investment. Don't open your broker app every 2 minutes to check if everything is okay or how goes the market that day. So my conclusion is that investment should be boring. It should be boring, and it is like this, okay? Out there you can see someone telling you that investment is like trading, 20% a day, this kind of stuff. They're all bullshit. It's not sustainable in over time. Is a fantasy, It's something if someone told you this, is because probably they want your money, So the conclusion is that investing should be boring. And this is something that I wish to know 2 years ago. This is not something that your favorite finance guru is telling you on the internet, right? Because more diversified, passive, and the long term your strategy is, more likely is for you to achieve your goal. So stop investing in meme stock and subscribe to my channel. In the next video, I will explain how to practice diversify your portfolio, which broker choose, and other details. But for the moment, I think that's it. If this video was helpful for you, or if you have any question, please comment down below. And thank you for your time.